Cryptocurrency is the buzzword for investors. Which is best for me, Dogecoin or Bitcoin? Hi there, welcome again. My name is Lalita Jayabalan and I help people make the right investment decisions. In today's video post, we are going to be looking at the fundamentals of cryptocurrency. So what exactly is a cryptocurrency? These are nothing but digital currencies where every single transaction is verified, encrypted and recorded in a digital manner. So whenever you make a transaction, right from the creation of the currency till its latest transaction, everything goes into a digital secured ledger. That is why people believe that these are great assets to own. So what happens when you make a transaction? Similar to your locker key, what happens is there is a pair, there is a public key and there is a private key. So the public key is what is used to create an address to your wallet, and you get a private key which is your right to ownership to that wallet, and also it helps you access your wallet. So if let's say I want to transfer a Bitcoin to you, I'll use the public key because that is the address to your wallet, and when I transfer it, what happens is a block is created, basically logging the transaction, but the process of creating the block itself is very sophisticated, and people who do that are called miners. So they create the block which is basically a log of the transaction just to authenticate that I have transferred the cryptocurrency to your wallet, and that goes into a network of computers which actually store all the entire trail of that Bitcoin right from the time of its creation. And so when you use your private key, you can access your wallet and check your balance, or if later you want to transfer it to somebody else, you're going to use someone else's public key to do the transfer. So this is how the transaction happens with cryptocurrency. Okay, fine, this all looks a little funky. So how did this whole thing start? The idea of a cryptocurrency or a digital currency was first floated by someone called Wei Dai all the way back in 1998. However, the very popular cryptocurrency of today, which is Bitcoin, was first invented by Satoshi Nakamoto in 2009. So who's this person? We don't know. The identities of this person is really a mystery today. In fact, we don't even know whether this is a person or a group of persons, or is it a corporate, or is it a nation? Nobody knows the answer. In fact, people don't even know whether this is Japanese. It's just the Japanese name has been chosen, but it need not, the people behind this need not even be Japanese. So that goes for the mystery part of Bitcoins. So ever since Bitcoin was first invented in 2009, as of date, 12 years later, we have 9,000 cryptocurrencies in the world. Yes, you heard it right. It's 9,000 cryptocurrencies. And these currencies are all traded across 371 crypto exchanges all over the world. And there are about 5 crore investors like you who are already trading cryptocurrencies. And this has become very popular just in the last year, ever since the COVID lockdown started. And it is known that today about 1.5 crore Indians are trading in cryptocurrencies. Can you believe that? All right. So what is the market capitalization of all the cryptocurrencies trading in all of these global crypto exchanges today? It works out to be something like $2 trillion. And just to give you a scale of things, India's stock market capitalization is also around $2 trillion. So what took us 30, 40 years or even 50 years to create, crypto exchanges have managed to do it in a much shorter time. In fact, it didn't even take them 3 years to get here. All right. So all this sounds very exciting. Coming to our topic, we would like to analyze whether cryptocurrency is a good investment for us. So to answer that, the first question that we need to analyze is cryptocurrency a currency? Fundamentally, for any money to be for any medium to be accepted as currency or money, it needs to satisfy certain characteristics and certain functions. So, what are the characteristics that something that it needs to possess? So, for something to be called money, it needs to be durable, it needs to be portable, it needs to be divisible, it has to be made available in a limited supply, as well as it has to be acceptable. So, if you look at cryptocurrencies, it looks like all the characteristics are present in cryptocurrencies. Then let's go into its functions. So, there are certain functions a medium has to offer. So, first of all, the cryptocurrency has to offer a medium of exchange. Yes, it offers that. Unit of value. Yes, it offers that too. And a store of value. Fantastic. It offers all the three facilities. So, a cryptocurrency seems to be satisfying all the characteristics and functions required for it to function as a full-fledged currency. So, why is it not really recognized by the governments of the world? The reason is none of the governments in the world have declared it as a legal tender. For money to be commonly accepted and used for payment of goods and services, a government or the central bank of every country needs to come and declare that as a legal tender. Unless that happens, it is not going to be accepted by a good majority of the people for doing legal transactions. So, not only that, the governments are also wary because they will not be able to get a handle of the blocks in the blockchain. Today, what happens is when two parties want to exchange goods or services, they have to make payment for money, and that happens through a third party called a bank or a financial institution. In the case of cryptocurrencies, that third party is completely absent. That knowledge is collectively stored, encrypted and stored in the blockchain, and today governments don't have access to that. And so they fear that all kinds of illegal activities and unlawful activities will use this operation to fund their businesses, and that is the reason governments are very hesitant to declare this as a legal tender. So, what does this tell us? That definitely cryptocurrency is not really a currency. So, if that is not a currency, is it an asset? You got it right. In the US, they have recognized cryptocurrency as a property. So, let's say somebody transacts in a cryptocurrency and they make a gain. Doesn't matter whether they make a short-term gain or a long-term gain. As long as they make a gain, it is classified as a capital gain. So, they will have to declare that as capital gain and pay tax on that. Indian government and Indian tax department is also thinking along the similar lines. So, anybody who makes gains by trading in bitcoins or doggy coins or any other cryptocurrency will have to declare those incomes as their capital gains and pay capital gain tax on that income. So, let's look at the investment aspect. So, we all are very familiar with investing in a property. What happens when you want to invest in a property? You go visit, you do a site visit, you check the recent transacted prices, you also determine whether that city or the micro market has potential for growth and capital appreciation in future. There is a lot of checks that you do prior to making a decision whether you want to invest in the property or not, and then you put down your money. So if you really walk through the entire process, there is a very structured method that you employ to make that decision to invest in a property. This is an immovable asset. Let's take a financial asset. Let's take your stock investing. Although most of us invest by looking at a news or by following momentum investing, fundamentally a stock has a very structured method to investing. So we look at a company, how that company has performed in the past, what market they operate, what products they produce, are they satisfying or fulfilling a need in the market, and what are their growth potential? Are they investing in R&D, innovation, and does it really have a growth potential in future? We are also looking at the extent of what dividends this company pays out and things like that. So there is definitely a very structured process by which we evaluate the company. and then we put our money, because we understand whether we are paying a premium or we are getting that company stock at a discount, and then we are making an informed decision about investing in that stock. Now, let's come to cryptocurrency. If this is not a currency and if this is to be treated as a property or as a capital asset, then the first question that we need to ask is there a structured or established process of evaluating the price of a cryptocurrency? Whether it is Bitcoin or Dogecoin or any other coin, it doesn't matter. Today, I believe we do not have a very structured process or any basis on which the price rise happens in a cryptocurrency. All we know that is that number of coins issued is limited. So when supply is limited and when demand rises, basic economics tells us that it gives rise to price rise. So there is a lot of price rise. There is volatility in prices. So we do not know how to go and evaluate this product and what are the basis for which the price will appreciate in future. The only thing we know is demand is the only factor that is driving the prices up. And for those of you who have been following the price of Bitcoin, you know that it went all the way from $4,000 to $64,000, but it had a very, very bumpy ride in between. So we are not sure, about how to go about evaluating this asset. Secondly, is it transparent? Do we know who are all the people that are actually holding Bitcoins, and when did they buy and how much do they hold? Do they exchanges tell you who are all the miners? And every time you make a transaction, it's like your stock account, right? So when you make stock trading, the brokerage makes a certain percentage as your brokerage. And they do tell you, so it's quite transparent. But when you trade in cryptocurrencies, the miners are being rewarded because they're working on sophisticated algorithms to encrypt your transaction, and they get paid for that in Bitcoins itself. But do you know how much they get paid? Is it being transparently shared with you? These are some of the questions that you need to ask and become an informed investor, so that you can make a decision whether it is prudent for you to invest in a Bitcoin or any other cryptocurrency for that matter. So as with any investments, there are two things that we are interested in knowing. What is my upside and what is my downside when it comes to investing in a cryptocurrency? So I would say the upside, looking at things, the upside here seems unlimited. Nobody can predict how far this will become, whether it is going to give you 10% return or 100% return or even 1000% return. So upside is definitely unlimited. And what about downside? Because it's a high volatile product and nobody understands this fully, downside is I would say it's predictable, and in fact it is limited. How much is the downside? The maximum downside is only 100%. That is, if you put $1,000 today or 1 lakh today in cryptocurrency, the maximum loss that you can incur is only that 1 lakh. You cannot incur more loss. So your downside is definitely certain and it is predictable. That is not to discourage you from experimenting with this new product, but my suggestion would be this. If you are able to put a certain amount of money in a cryptocurrency and not be bothered about the outcome, whether even if you lose 100% of it, if you are able to sleep peacefully, then I would say go ahead and make your investment. In investments, prior to investing, for any investing, we do not know whether it is a right choice or a wrong choice. So only in retrospect, 5 years down the line or 10 years down the line, you can think back and say, oh, I made a good decision, I made a bad decision. So the only thing that is there in investing is informed decision making. So today, I hope this blog gave you enough information to understand what cryptocurrency is and what type of asset it is, and whether you are fully equipped and have that risk propensity to invest in these Bitcoins or Dogecoins. For more videos, please click the subscribe button, and I thank you for watching this video and see you in the next post.